Hello, welcome to FinInvest Niger. My name is Tom Princefield. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. In the course of this analysis, we would like to talk about uh, Neimeth Pharmaceutical Plc. Neimeth Pharmaceutical Plc. We want to analyze the companies and fundamentals to determine the company's suitability or not for our individual investment portfolios. So this is the full year result. All right. This particular column is for the full year 2025, while this other one is for the full year 2024. So we'd like to commence with the company's revenue. The revenue here, the sales or turnover here for the full year 2024 was on 4.485 billion naira, 4.485 billion naira, and that figure grew to 7.369 billion naira, from 4.485 billion naira to 7.369 billion naira. All right, that's an increment of about 3 billion naira thereabouts. And so we also want to take into consideration the company's gross profit. The gross profit here grew from 1.957 billion to 3.349 billion, from 1.957 billion to 3.349 billion naira. This is approximately 2, and this is 3. That's a growth of about a billion naira. That's quite interesting. We could observe growth in these two parameters. We also want to consider the company's operating profit. The figure for the operating profit here, there was a growth of from 18.886 million naira, 18.886 million naira to 2.711 billion naira, from 18.886 million to 2.711 billion. It's a very huge level of growth, from about 19 million naira to about 3 billion naira. This growth is massive. It's massive. It's somewhat uncommon. Now let's look at a dramatic twist here. See, for the profit before tax, all right, the company had a loss of 854.43 million, 854.43 million naira in the year 2024, as against 1.488 billion naira in the year 2025, from a loss position of about 900 million naira to a profit position of about 1.5 billion naira approximately. Now, we want to also x-ray the company's profit after tax. So the profit after tax here, the company recorded a loss of 885.33 million, 885.33 from 33 million to a profit level of 982.12 million. All right, so from a loss position to profitability in the year 2025. So we now consider the company's total comprehensive income, which is 982.112 million, as against a loss position of 885.33 million. Now, that brings us down to the earnings per share, which of course is the most important value figure in the entire table here. So there was the company sustained a loss of 21 kobo per share. It had the loss of 21 kobo per share to a profit position of 23 kobo per share. All right. So the company recorded losses here, and then it turned profits in this particular column. And so from a loss of 21 kobo to a profit of 23 kobo per share. So we are through with this segment, this section of the analysis, which represents the profit and loss section. We now want to go to the other segment, which is represents the cash flow statement and the balance sheets. So let's start with the company share price. The company share price here, its current share price is 12 naira 90 kobo, 12 naira 90 kobo, and the shares outstanding is 4.27 billion naira, 4.27 billion. That's the share outstanding, and the company's market capitalization is 55 billion. That is when you multiply the company's share price, which is 12 naira 90 kobo, by 4.27 billion, you will arrive at 55 billion naira. That's how big the company is. In other words, if you have 55 billion naira, you can buy the entire company. And it also gives us an idea of how big or how small the company is. In this case, the company is relatively small, because some companies in the exchange have a market cap as high as a trillion naira and above. This one is quite a small company in relation to other ones. So let's look at the company's cash flow statements. So the company has a cash of 1.610 billion naira, 1.610 billion naira. In fact, it's quite impressive, because the company generated here is even less than a billion, and the company is able to maintain a cash position of more than a billion naira. So that's quite commendable. Now we want to look at the company's equity. The equity here, or what is called shareholder fund, all right, is 2.634 billion. 2.634 billion is the company's equity. The company's equity, and so that is telling us about the company's balance sheet strength. It has a very strong balance sheet, in that it is not having, a negative equity. Some companies are in a very bad shape, to the point of recording a negative equity. So we now go to the company's equity per share. Okay, that's simply dividing this particular value by the share outstanding. That will give you what? That will give you 62 kobo. Now, this particular figure is the company book value, and it represents. It doesn't you don't apply it on it doesn't really make much sense on its own. It's there for comparison. You compare this to this, all right? When you compare this value and this value, the bigger the difference, okay, the more expensive the company is, and the lower the difference from this comparison, the less expensive the company is. It's there to tell you how cheap or expensive the company is. So in this case, the difference is very high, about 12 point something naira. So the company is somewhat expensive. All right. So now come to the PE ratio. The PE ratio simply means the price, all right, the price earning ratio. Simply divide the price, which is what? Which is 12 naira 90 kobo, by 23 kobo. Okay. This particular value, 12.9 by 0.23, that will give you 56.09. 56.09 is the PE ratio here. Well, it's not as much as that of Mercure. Mercure is about 99, is about approximately 94. 94, is the PE ratio for Mercure. But this one is 56.09. It means that in layman's parlance, it means that you are buying $1 of the company's earnings. Sorry, 1 naira of the company's earning for 56 naira. All right. It's like going to the market to buy an item worth 1 naira for 56 kobo, for 56 naira. That's the meaning of this particular figure you are seeing. So it's somewhat a bit, it's somewhat expensive, but all the same, is something you can still buy, because of the recovery the company has recorded, so far, and how I wish this recovery will continue into the fourth quarter, and even into the coming year, into this particular year 2026. And so I want to give this company a buy recommendation. Please, this recommendation is strictly personal, all right, and it's not binding on you or on anybody. Okay, so you can take it and you can as well leave it, all right, because I remember sometimes back I gave a particular recommendation, and some people were arguing against it. Well, this is my personal this thing. You have your own, recommendation you want to give. You can go ahead. All right, it's not binding on you, but this is my personal analysis. You can buy it, you can take it or leave it based on what? Based on your investment objective, your time horizon, and your risk appetite, which may differ from mine. Okay, that is it. So although the entire exercise here is academic in nature, it's for entertainment purpose, but I'm still dropping this particular recommendation. Should in case you want to consider it, then this company is a good buy. And please also consider risk management. Don't put, you may put like 5% or 10% of your capital into this single company and nothing more than that, so as to be able to curtail risk, because we don't know whether this recovery will continue to the future or not. Whether it is just a temporary thing, we don't still know. That's why if you are buying, make it a tiny portion of your portfolio. Please like this video and subscribe to this channel, and make sure you help me share to members of your community. And more importantly, if you are really serious about investing, all right, please then try and contact me so I can see how I could be of help to you. And that's why I'm here, to render help, to kind of give you a kind of guidance, hand holding in this investment journey. So thank you very much for watching.